Today's session is delivered to you by A to Z Forex, sponsored by Fidelis Capital Markets, fcmforex.com. And Adamos is the head of brokerage firm at FCM Forex. Guys, also today is a special day. It is Adamos' birthday, so happy birthday, Adamos. Thank you for joining on this special day for us. Appreciate it very much.
Thank you very much, Yagub.
I would sing happy birthday song, but I don't think it's the right place.
As you said, it's a very interesting day today, so I wouldn't be anywhere else.
All right, that's the spirit. Thank you so much. So let's make it short in order not to get too much of your time on this special day. Adamos, what do you think that are the most important, three most important fundamental events for today and this week in total?
Yeah, the most important events. The most important event of today is the Federal Reserve announcement of monetary policy. Then on Friday we'll have the Bank of Japan monetary announcement as well. And again, for today we'll have the GDP releases for UK for the second quarter of 2016, which was the quarter that the campaign was happening mostly for the EU referendum. And we had also the Brexit vote at the end of the second quarter. So it's going to be also a highly impact release on the UK GDP. And yeah, these are the most important events of the week.
Do you expect any change from the Fed's monetary policy approach?
I do not expect any change. However, I expect them to give some clues about the monetary path that they will follow in 2016 and in 2017. Market participants are building expectations now that there will be a rate hike in 2016, and also we saw some recent data supporting this. We saw over July retail sales, industrial production, employment, non-farm payrolls to be better than expected. Yesterday we had new home sales, consumer confidence better than expected as well. So more than 70–80% of the news of the US has been better than expected in July, and that gives some support to expectations that by the end of this year we're going to have a rate hike by Federal Reserve. So, and with that said, we're likely going to have a hawkish announcement on Wednesday, sorry.
Okay, today. Which is today. And do you actually think that? Well, let me elaborate the question. Do you think the US dollar is a national currency or a global currency? And whatever your answer is, how would the Fed be basically reading out the data when it comes to the current geopolitical developments?
So yeah, the US dollar, I believe that it's global currency. As you said, the question was if it is a global currency and what else? Because, I mean,
well, you answered the first part. It's a global currency. Given the fact that it's a global currency, how should or how does the Fed actually perceive or let's put it, digest the national and global data that they are receiving right now?
Yes, mainly we see that the US dollar, as I said before, is a global currency. There is high geopolitical risk at the moment, as you said, and but in there, I think was in the previous two meetings when they have removed the word global developments. So the Federal Reserve is looking more into US economic data, or is giving more weight in the US economic developments rather than to the global developments at the moment, because we also had before the Chinese worries, and because of that we saw that this limited the Federal Reserve rate hike decisions, because at the beginning of the year we have been expecting that up to June we will have 2 rate hikes, and we had only 1. So by saying that, I'm expecting that the US is going to give clues for a rate hike this year, and mostly they are going to use a language like everything will depend on incoming data. So by
not really right,
this, sorry?
Which isn't really a lie, actually. Everything, of course, depends on the upcoming data.
Mm-hmm. Oh. Yeah, so they will say that everything will depend on economic data, and the market will be very volatile during the release of the economic data because of this. So I believe that the Federal Reserve is mostly looking in US economic data, but also they are looking at the global event, but not so much. And geopolitical risk is if we see increasing and better than expected employment, inflation, and other data that like retail sales, industrial production. If we see stronger economic data like this, they are going to increase the rate despite high geopolitical risk.
Okay. You have also mentioned that the second most important event for this week is the Bank of Japan. What is it expected from Bank of Japan?
Okay, for the Bank of Japan, it is expected that they are going to add stimulus, and but there is also a discussion that the Japanese government is going to add fiscal stimulus. So in these last 2-3 days, we saw a volatility in the USD because yesterday we had a doubt about fiscal stimulus. The Japanese finance minister has said that the government didn't decide on the size of the stimulus that they're going to add, and because of that, Bank of Japan may wait and see. So this was an expectation built yesterday in the markets. That's why we saw the Japanese yen strengthening and the USD yen going down. Nevertheless, on Friday, we would expect either increase in the asset purchases by Bank of Japan or a decrease on the rate, which is now at minus 0.1%, could go down to minus 0.3%. Nevertheless, except from Bank of Japan, we need to look into the government stimulus and what they are going to do, because over the last week, the USD yen has been rising because expectations were built towards fiscal and monetary stimulus. If we don't see that, or if we see something lower than that, then the Japanese yen will strengthen, because the market has already discounted a size or some size of fiscal and monetary stimulus.
Okay, great. And let's also take a look at the technical analysis. What does really this information really translate into? I see that you have US dollar, Japanese yen in front of us.
Yeah. Mm-hmm.
So, looking at it, what can we really see from the US dollar, Japanese yen?
Yeah, for the USD Japanese yen, we can see in the daily time frame that it has been on a downtrend, and we can see that this downtrend is. I have drawn this downtrend at the previous webinar that we had. I didn't change anything. So this downtrend line is valid. We see 3 points on this, and on the daily time frame, also we see that prices went down to 104 support, where is the moving average 20. That happened yesterday because of the.
And it was also previous low as well, so it basically found support on the previous support.
Mm-hmm. And yeah, exactly. And also we see a white candle today going up to the downtrend line. It finds a resistance there as well. And the reason for this spike is that today we saw a revive of the stimulus expectations, and prices have went up to the downtrend line. In the intraday time frame, we see that it has formed, as we said in the previous, a head and shoulders pattern in the intraday. prices went down to 103.97, okay, 104 support. And then as the stimulus expectations have revived, prices have picked up and went up to 106.60, 106.50. And so the main event today, the main event of the week, the Bank of Japan, is going to drive the USD yen. And we see that the USD yen is fluctuating according to where expectations go. So there is no clear view on the technical side on the intraday, on the short term. However, we see that on the daily time frame we are in a downtrend, and that increases the expectations for downtrend to continue based on the technical analysis theory. However, if we see higher stimulus than expected by the government or by the Bank of Japan, then this downtrend line on the daily time frame could be breached. And if we see a penetration of the 107.33, then we will see a confirmation of the reversal in the trend. And most likely we are going to see USD yen higher towards 110 as well. But this will depend on the release of the Bank of Japan.
Given also the current price action that we are seeing, that the market has made a higher high compared to the previous high, previous high that we had, what is the likelihood that you expect the 110 level that you are commenting to?
I have in mind that we may see penetration of the 107.43 resistance because first of all, I consider that Bank of Japan and the Japanese government doesn't want to see USD yen going down again. And since we have some expectations built already in the market, I would expect them to fulfill these expectations. Otherwise, they should expect the USD yen to go down. So they have this in mind. So they know that if they disappoint market participants, then they will see the yen strengthening again, and it's something that they don't want. It's not helping for their inflation and for their economic activity. So with that in mind, I would expect that the USD yen will test 107.43. I would expect them to add the stimulus that the market participants have been expecting. I don't expect them to do more than that though. So I believe that 107.43 will be tested. If the US dollar strengthens as well, then 110 could be a likelihood. And 110.60 is a strong resistance as well there. 110 is a psychological level and could limit the upside as well. So the logic behind USD yen going higher is that the US dollar and the Federal Reserve will give first of all, the Bank of Japan will not disappoint expectations, and then the Federal Reserve will give clues of a rate hike by end of 2016 and perhaps something more aggressive, something, more hawkish.
Great, thank you so much. And you told me that you also wanted to touch base about the cable, correct?
Yes, about the GBPUSD. So, okay, we saw the GBPUSD that went down to, okay, what happened in the Brexit? Went down to 1.2805, recovered back to 134.87, and now we see the GBPUSD at the support at 130.77. And today, as we said before, we have the UK data, GDP data, which is going to be a very important event for the GBPUSD. Yesterday, we have the Monetary Policy Committee member Martin Will saying that he's now ready to support a rate cut. In the previous meeting, he was actually opposing a rate cut because he wanted to see more economic data for the UK economy before he takes any decision. And looking in the intraday, and this is the chart of the intraday, first of all, we see a descending triangle here. in the H4 time frame. So let me make it more clear. This is a descending triangle. These are the points in the 4-hour chart. This is actually giving an indication that the prices may go maybe breach 130.64 and go lower than that. If we see in the 1-hour time frame, let me delete the triangle in order to make everything more clear. So if we go in the hourly time frame, we see that the GBPUSD is trading in a range zone at the moment at between 130.160 and 130.64. It is in indecision zone. They're most likely expecting the GDP data and then for the Friday Federal Reserve announcement to see what is going to happen with the US dollar. Nevertheless, what I'm expecting is that if we see a breach of 130.64, then the GBPUSD will go lower, and that will also depend on the events of this week. So about the GBPUSD, what I'm expecting is that until Friday will be driven by events, and if we see some confirmation of this reviving downside momentum, then prices will fall below 130.64 and could go towards 130 and then even to the low of 128.
In total, in general, GBP for me has a level of 6 at the end. Like it was always hovering at 156, 166, and so on. So I also agree with you that it is expected to be on the downside, especially after Friday's news that we will be having. And if the Fed is also hawkish today, so the US dollar appreciating and the rest depreciating, we could indeed be expecting this kind of a bearish move. Do you have any other currency pair that you would like to cover as well?
Yes, let's look at the Aussie USD. Just a brief discussion, because early this morning we have the CPI data for the Australian economy, the consumer price index data. So mainly the RBA trimming mean was better than expected, higher than expected. So we saw a higher increase in the second quarter for the Australian economy, and that is limiting the chances for RBA to cut the rates in the following month. That actually has created a conflicting effect at the time of the release. We saw those USD bouncing up, rising, spiking up to 0.7557. However, immediately went down to 0.7457. And that actually happened because there was a limited chance for a rate cut. The Aussie strengthened, but then market participants immediately realized that this is increasing the risk-averse sentiment, and they lowered the demand for those USD, which went down to 0.7457. And in the daily time frame, we can see that it's creating a symmetrical triangle. There is a narrowing in the fluctuation zone. There is an uncertainty zone in that because of the events that we are going to have this week and the events that has been happening recently. So if we see any break of this triangle, then that will indicate also the direction of the, if we see a penetration of the falling trend line, then this will indicate that the Aussie USD will move upward. If we saw a breach of the uptrend line, then that will suggest that the Aussie USD momentum will get bearish.
Yesterday, when we were also discussing and analyzing market on A to Z Forex, I was commenting that I'm convinced that the market is ready to shift its direction for US dollar, Canadian dollar. I indeed mentioned that I am looking for short positioning, and I had shared my personal entry on it that I've already sold the USD Canadian dollar from 132.40 level. that's the level, if you look into it, that corresponds with the 110% Fibonacci retracement zone. The reason behind this bold call that I had was not just Fibonacci, but also the reasoning behind crude oil as well. When I look into the crude oil, I see that the trend is kind of dying out. I'm referring to bearish trend that we have, and the market yesterday was way too much far away of the moving average. So 50 moving average, let's make it 20 moving average to make it even better for us. And it was basically around 60-70 points far away from the 20 moving average. So looking into it today, we can see that the crude oil tried to break above the 20 moving average. And if you know what I generally do with these moving averages, is that I use them as a support resistance level. So in a fast moving trend, which we have been having so far, the market generally tends to test the 20 moving average and then continues its direction one more time, which has been the case so far for the last 5-6 days. But in a slow moving market, where the market the trend tends to die out a little bit, nonetheless I'm convinced that crude oil buy level mostly stands at 41.10 level, and if we see, unless today a break above 42.94 level, we would be seeing the crude direction to continue on the bearish side. However, if we see a break up above 42.94 level, we would be expecting to see this market movement continue, and we would be initially aiming to have a 43.88 level, which is just below the 100 moving average at the moment. Let's move on back to the US dollar, Canadian dollar. As we discussed, I've already shorted the pair myself from 130 to 40 level. You can find the analysis on a2zforex.com if you would like. And my target at the moment remains towards 88% Fibonacci retracement zone, and that falls onto 131.23.25 level. If we zoom a little bit, we can see that this is the level historically also as a support or resistance level. You can see over here just in July 131.30 level, etc., has already acted as a dynamic resistance level as well. When we move on daily time frame, you can see the relevance of this level even more, and you can see there has been testing on the 24th of June as well, which the pair couldn't break above and continued its bearish direction. It has been historically important level, even so that I can call it a pivotal level. So nonetheless, look for 131.20.30 level if you are shorting it, and that should be a realistic level. If we see a break below that level, it's likely that the pair is going to be testing the 130 psychological support level. Now let's move on to USD Swiss franc. I know that I've been telling over and over again that the market is in favor of stronger Swiss franc. However, though, since the US dollar has been appreciating in the last few weeks, mostly because of the global instability, we have seen the rally on the USD Swiss franc on a positive side, which means the US dollar is appreciating over the Swiss franc. At the moment, though, we are just between 88% and 100% Fibonacci retracement zone. So I'm convinced that it is a good sell level. I know that it is against the trend at the moment, but nonetheless, I'm still convinced that it is a good sell level between 0.9930 to 0.9950 level overall. if you are patient enough, the best level actually would be to sell it at 0.9955 level, to be more precise. And you can use just 30 pips of stop loss, etc. And if you want to go very secure, the recommendation would be use 45 pips of stop loss, and then you can be targeting again to 88%, which is 0.9910 level, and then to the next level at 0.9870 level, and last but not least, our targets should be at 0.9830 level, which is because of this level over here, which is a major previous support resistance level. So these are the levels that we should be looking into for USD Swiss franc as well. In the meantime, I would avoid long in the pair, and I would stay on a safe side for now.